Alright folks, welcome to section 1E. ICT and CRT. Now before starting, I'd like to point out the alignment timeframes for CRT. As you know, in CRT, one of the key factors is finding the entry. And there's mainly 3 different entries you're looking for. Alright, so you got 3 candles. Right. In case of a bullish CRT. You're looking for, number 1, you're looking for a Model 1 entry inside here, right? As you know by now, as you should know, candles are ranges, right? So you're looking to trade each range. So you have range 1, then you have range 2, candle number 2, and then you have candle number 3, right? Over here, of course, key level. Now, the entries are as follows. Model number 1 inside of this candle. What's that? That's, you have a high, and then you have a turtle soup, and the thick up close candle that's stabbed into the old high is your entry. Right? As soon as you close below it, then you're good to go. Right? Entry over here. Stop loss above the candle, and target the lows one by one. Right? That's the first model, and vice versa in the bullish scenario. Low, thick, down close candle used to manipulate price below the old low, close above, and you got the entry. Right? The next entry is an OTE in the 3rd candle. Alright, so you're going to look, this is an OTE. So the candle is manipulated. You have candle number 1, you have turtle soup, and now a CRT pattern trader, and this is important, is going to blindly try and buy ASAP. So you'll try and buy over here. It's going to dig deeper, OTE, and then rally. Then he gets stopped out. Right? This happens for 2 reasons. Number 1, to scare away early buyers. Number 2, to fill the wick. As I've said before, if there's a long wick in a candle, then expect at least 50% to be retraced to. And in the 50% of that wick, you'll see a breaker, OTE, or an order block. Right, model number 1. Right? And of course, the final one is my favorite, the kiss of the turtle soup before the target. Right, so before this high is hit, there's always going to be in this candle, right? If you zoom in this candle, there's going to be one final turtle soup, and the target is met. Right? This is the easiest. This is like it's like taking candy from a baby. Right? So those are the three entries you have. You have model number 1 and candle number 2. And you have a breaker / OTE candle number 2 or 3, usually 3. And you have the Kiss of Death turtle soup in candle number 3. This is my favorite, right? And I'm looking forward to seeing many of you using this one. All right? Now, as to the relationship of CRT and ICT, CRT is a concept heavily based on ICT. But it also has to be said that it is a refinement and improvement of ICT. CRT is the best way to determine the draw liquidity. That's why you see many of these ICT traders will start using it the way I do, right? So first, 50%, important, super important. Now, if you trade the CRT low to the 50% your entire life, then that is a career you can make in trading. Trading just this, just ignoring everything else. Previous candle, candle 1, Monday, 1 a.m., whatever, right? You pick 4-hour candle, daily candle, weekly candle, manipulate it, and then the next candle you trade up until the 50% of the previous candle, and you're out. You bounce, and you look for the next trade. Right? This is a model which has an extremely high win rate, and it's enough to build an entire trading career. Right? It's the 50% model. It happens every day, and every single week, all time frames. You're looking to catch one of these on the 4 time frame every week, and you're good. Right? So, first of all, CRT is the most accurate way to determine draw liquidity. It's the most accurate way to determine where the price is heading to next. It gives a meaning to time through 159. 159. This is the daily candle division in 4 hours, right? One daily candle. You'll see 159, 159. Right? Spoken of this before. In SOT, shadowed SOT. And it gives a meaning to MMXM, right? It's an entire system by itself. It gives a logical meaning to market maker models. So instead of marking random original consolidations, right? Any random consolidation you see, you're going to see, is this a previous candle's high, CRT high, or not? If not, then it doesn't matter. You look for another original consolidation, quote unquote, which is simply a previous candle's high or low, right? So this is how CRT is an improvement to all ICT concepts. And again, the basis of all of CRT and ICT trading, right, is simply trying to catch the range of one candle, right? That's all that's ever happening. Don't forget, it's open, key level, when you're bullish, and rally, open, key level, and dump when you're bearish, and that's it. This is all we're doing. If you take this away from the entire course, then I'm good. I've done my job. Though there's a lot more, but if you're being lazy, then this is all you need, right? When you're bullish, key level, rally. When you're bearish, key level, dump. But how do I know if we're bullish? Because I told you, wick above lower prices, wick below higher prices, and so on, right? That's how you determine where price is going next. Wick above. Next candle probably going to go lower. Wick below, vice versa. Close above higher prices. Close below, vice versa. Volatility inside candle means there's a violent price move coming. Right? Now it comes to the time frame alignment of CRT. Let's start from the monthly and go down all the way to the 4 hour. Right? So we start at the monthly. So a monthly candle, monthly CRT, you're going to look to go down to the daily or the 4 hour Model 1, right? Remember the entries? Model 1, breaker, and OTE, anchors of death. For the monthly candle, you're going to try and go down to the 4 hour. Look for Model 1 over there, right? The 1 week, you're going to look down into the 15-minute model number 1. The daily candle, you're going to look into a 5-minute model number 1, right? Now, time frame alignment, as I've said before, is not a fixed concept because every time frame is printing at its own pace. So there is no fixed time frame alignment. These are rough estimations. You can also have this as the 1 hour, for example. This is the daily. This has a 15-minute, right? It's up to you. But this is the closest approximation of what it's like, right? 4 hour, 5-minute, 12-minute. So if you're trying to trade the range of this candle, right? Trading the monthly candle range, then pay attention to the 4 hour time frame. Your pattern is going to form in this time frame, right? So this is the range you're trading, and this is the pattern or entry model, quote unquote. And I say pattern lightly on this time frame, right? But the easiest way, assuming you are at least a semi-beginner, intermediate ICT student, the best way to know where price is going next is CRT, right? And that concludes the lesson ICT and CRT. I'm not going to dedicate this one to teach ICT. I've done that before. I've summarized the entirety of ICT before, right? If you remember. CRT Unlocked, the technicals were designed to be very brief, to the point, with more practice coming in the group chat and the PDFs. Right? But the base, the foundation is laid over here. The entire foundation of CRT is laid over here. Now you build on this, right? And to reply to the question I get a lot of times, now that I've exposed CRT, is it going to stop working? No, it's not. Relax. Don't get nervous. It won't stop working at least until the year 2030. After that, we'll see. If there's a signal that it's going to last longer, I'll let you know. Right? And with that, I conclude this lesson. Good luck, good trading, and see you in the next section.